Okay, hi everyone, guys. Good morning. Hi everyone, am I audible?
Yes, sir. Good morning, sir.
Morning, sir.
Okay, so guys, today we are going to have the Bible session. Okay, how it works is we'll be discussing the topics we have discussed so far. Now, the way we will be discussing is through question and answers. Okay, so what I'll do, I'll ask you questions from the topics we have discussed so far, and we'll try to cover most of what we have discussed so far through question and answers. Okay, so guys, I'll try to ask you questions. You can volunteer yourself which question you want to answer. Okay, but I expect everyone to participate and answer the questions. Okay, if somebody is not answering the questions, then I'll personally point out and I'll take the name that person should answer the question. Okay, and guys, if you have any doubt, any related to any topic, feel free to ask. Okay, it's like a revision class. It's like trying to get better with the topics we have discussed so far, and try to get better with the delivery of our answers. Okay, we should be able to properly answer the questions, structure our answer in such a way that it shows to the interviewer that you are very clear with the concept. Okay. Any questions so far, guys, in whatever we have discussed so far? Any doubts? Okay. No worries, guys. You can ask me the doubts anytime. I just wanted to check if you have any doubt up front, we can discuss it right away. Okay. But feel free to ask me any questions anytime. Okay? All right. So Praveen, you haven't got the access to LMS yet. Praveen, right? Praveen,
Yes,
when have you joined?
Sir, I joined on the last class. It's 12th of August. From
Okay. So Praveen, can you do one thing? Can you drop a mail to Damini asking
Yes,
for the access?
Yes, sir. I actually mailed her 3 times on the last weekend. Maybe she'll let me have access today. I even mailed today.
Okay. Praveen, am I marked in those mails?
Yes, sir.
Am I marked?
Sorry, sir.
I'm asking, have you kept me in loop in those mails?
Yes, sir. I dropped 3 mails on the last. I mailed her on Friday, Saturday, and even on Sunday.
Praveen, what I'm asking is, have you kept me in the loop?
No, sir. Not, sir. Not.
Right? So, because I have not received any such mail. Okay. So, what you need to do if you don't get a reply from Damini on time, okay,
Yes, yes.
you need to mark me.
Sure, sir. Yes, sir.
Okay.
Yes.
So next time when you drop a reminder, keep me in the loop.
Okay, sir. Sure, sir. Yes.
Okay.
Yes.
And if you don't get it by today evening, drop a mail that Damini, please give the access ASAP, keeping me in the loop. Okay.
Yes, sir. Yes, sir. Thank you, sir.
All right, guys. So we'll start the session. Guys, whenever I ask the question, what you can do, you can raise your hands so that I can choose whom I want to take the answer. Okay? So everybody would be expected to raise the hands, not directly speak. Let me start with the very basic question first. What is the role of an investment bank in the financial system? Yeah, Rezwal, you can ask doubts, okay? you have some doubts, so feel free to ask some doubts. Okay, does everybody know how to raise hands, guys? Or is it not clear to anyone? Just check below, you will have a functionality of, you have to check, okay? You have to find it out. Guys, where is that functionality of raising the hand? Okay, anybody can speak.
There is an
Yes. So in
option
the
of
mode
reaction.
Okay, if you go to participants and more, is it? I am not getting that option. Guys,
Sir,
you are
there
a
is an
host.
Pariti, can you let me know?
so there is an option of reactions where you can choose to raise hand.
Okay, okay, got it.
Yes.
Guys, thanks, Pariti. So guys, if you see below, there are so many options like security, participants, chat, share screen, pause recording, reactions, apps, right? So one of them being reactions. So if you click on reactions, you will see multiple options. One of them being baseline. Okay. So I hope everybody is clear. Yeah.
Sir, Razor is saying something in chat box.
I have doubts. I'm not audible. Sir, I can't speak. Let me survival go Wi-Fi is on next Monday. Guys, Wi-Fi is this Monday. Am I right or wrong?
Yes, sir. It was for today.
Yes, sir.
Razul is saying it's on next Monday. Razul, can you clarify? Sir, you told me on next Monday. So last week I told you on next Monday. Where is the doubt, Razul? Last week I told you that on Monday or Tuesday you will have the Viva, right? In the schedule also you must have got the schedule. It says Viva. Okay, Razul, you need to be attentive to what is being said or what is being shared. Okay? You have Viva. You can't speak. Razul, you maybe need to take an exit from the meeting and re-enter the meeting. Yes, sometimes that solves the problem. So exit and re-enter. Okay, so all right, so we have a lot of hands raised. That's good. Okay, and guys, I'll mark your attendance also accordingly. So the person who has answered 2 questions, I'll mark that person as present. Okay. Otherwise, if you don't answer, I'll not mark you present. Okay, so I'll keep a tab, keep a note on how many questions you have answered. Because you also keep a track of it, how many questions you have answered. Okay. Yeah, Razul, if you cannot speak, buddy, you can type your questions in the chat box. Okay. No problem. You can type your questions, whatever doubt you have. You can write it in the chat box and I'll try to answer. But anyways, we'll go ahead with our discussion. So my first question is, what is the role of an investment bank in the financial system? Ashutosh, would you like to try this?
Sir, investment banks act as an intermediary in the financial system.
Okay. That's your answer.
Yes, sir.
That's complete. Ashutosh, I'm asking, what is the role of a investment bank in the financial system? What does it do? Everybody is a financial intermediary. Yes, a commercial bank is a financial intermediary. A broker, a exchange, a custodian, a depository. Everybody is a financial.
Sir, the investment banks helps in raising capital. It helps the banks, governments, and the corporates to raise funds. They help in IPO, in FPO, and bond issuance, and they also help in merger and acquisitions of companies. They help if a company wants to merge or acquire a company, they help in research. They help the company by researching, evaluating the company, and help in the negotiation process as well. Sir, they also provide, the investment banks also provide trading services uh, to the institutional investors or HNIs. Sir, there are two other there are two other things that they help in. They also help in research and asset management.
Okay. Anybody would like to add to what Ashutosh said? Ashutosh, it's a good attempt. Okay, that first line was completely incomplete. Okay, you cannot
Okay.
stop your answer at it's a financial interview.
Okay.
You have to tell them what does it do. What is the role of that intermediary in the financial system?
Okay, sir.
Very good. Guys, anybody would like to add? Feel free to speak up. Okay, if you would like to add. Anybody can speak up.
Sir, an investment bank is a financial services company which creation of a capital for the companies, government, and other entities. And sir, it also helps in asset management, like provide portfolio management services and engaging fund management activities.
Yeah, very good. Okay. Good guys.
Sir, the
very
role
good.
of
Yeah.
Sir, they
sir,
also
the role of
custodians. They safeguard cash and securities of their customers. For example, JP Morgan, Citibank.
They act as custodians also.
Yes, sir.
Yeah, that's correct.
sir, the role of the retail bank and investment bank are different, as investment bank only deals with related to the investment and raising capital.
Yeah. Okay. So let me ask you this question. Okay, how is the business model of a commercial bank different from an investment bank in terms of clientele, in terms of revenue generation activities? How an investment bank is different from a commercial bank? Guys, please take care of your hands. I mean, you have to take them down. You have to raise your hands with every question. Okay. So whoever has raised hands currently, I expect that person to be aware of the answer. Result, that's fine. I can understand you are not able to speak. So there is some technical glitch at your end, because at my end it is working fine. So maybe you can try out with a different laptop, or maybe you can try out with your mobile phone to see how it works. Okay. Diksha, would you like to try this?
The commercial bank deals with deposit and lending, whereas on the other hand, investment bank deals with trading securities like bonds, shares, derivatives, and investment banking provide financial services.
Sure, that's not a complete answer. What you can say is their business model is different in terms of, let's say, a commercial bank relies mostly upon the interest rate differential between the rates on the loans versus the rates on deposits. Okay, so if we take the deposits at 3-4%, if we give out the loans at 9-10%, the difference would be its main revenue generating. Yeah. Whereas for an investment bank, the business model is different. They are not allowed to take the deposits or lend out funds. What they do is they provide services to usually the big clients. Okay, and they charge fees from those clients. So their business model is more of fee based or commission based rather than a commercial bank whose business model is more of interest rate. Yeah, who's this?
Sir, is Raul.
This way. Yeah, you're audible.
Sir, I have some questions regarding the previous lecture, sir. Can I
Yeah,
ask?
but your voice is very low.
Sir, is I am louder, sir?
No, it's exactly the same. Just try to keep the headphones very close to you and speak a little loudly. Okay, don't be fast,
Sir, I
but
took the
speak.
earphones, sir.
So you can speak loudly, right?
Sir, I say loudly, but no voice is getting louder.
Guys, is everyone able to hear him properly?
No, sir.
So your voice is breaking.
So your
My
voice is not clear.
My voice is not clear or Reswal's voice is not clear?
There is also
Reswal.
Hello, sir, is I am audible, sir, now?
Reswal, you're audible, but your voice is very, very low. Okay, you're not clearly audible.
Sir, I don't know why, but I am speaking loudly.
But you can speak a little loudly, na?
Sir, I speak loudly, but why? I don't know why the voice.
Reswal, you're speaking the same way. I'm saying, be a little louder. Can you hear me?
Sir, I have some questions regarding the previous lecture, sir.
Yeah, now you're a little louder. Okay, please try to be a little more louder. Yeah, tell me.
Sir, in the last lecture, you say about the money market instrument. In the money
Be a
market,
little louder, Reswal. Try to speak a little loudly. Okay, maybe slowly but a little loudly, so that everybody can hear your question properly.
Sir, is I am louder?
Are you trying to speak loudly?
Yes, sir, yes.
Can you give me the meaning of the word loudly in Hindi?
Sir, how loud I go, sir? It's my.
I'm saying speak a little loudly. It's difficult to hear you. Okay, थोड़ा जोर से बोलो. Okay, please go on. Yeah.
Can I speak in Hindi, sir?
Try to speak in English, but a little loudly.
Previous class I saw lower, but the voice is clear. But I don't know why this happens.
That's what you're speaking. I can hear you, but I cannot hear you properly. Okay, you have to speak a little loudly. Yeah, Rezwan. Tell me. Rezwan, you want to ask any question? Okay, Rezwan, you can ask the question anytime. Okay, you have to be a little louder, please. All right. So, guys, when you are describing the difference between the business models, then you can describe the difference in terms of the clients as well. For example, a retail or a commercial bank can have a retail bank would have retail clients. A commercial bank would have corporates as their clients, right? And the kind of the services they provide would also be different from what an investment bank is. Okay. The main revenue generating activity for them would be the interest rate difference between the lending rates and the deposit rates. Whereas for an investment bank, the main revenue generating activities would be helping out the clients in terms of trading on their behalf, okay, to generate brokerage or to help them out in M&A or fundraising activities like this kind of things. Okay, so the revenue model for them is they provide these services to institutional clients and ultra HNIs to charge them a fees, a brokerage, or commission. Okay, whereas a commercial bank would be relying on mostly on the interest rate differential and to some extent on the services such as credit card, debit card, ATM services, or net banking services. They might charge a fees for these kind of services. Okay, but mostly it's the interest rate differential for a commercial or retail bank, whereas it is fee based or commission based for an investment bank. 2 points, guys. First, in the terms of the difference of clients. Second, in terms
Hello,
of
sir.
how they will generate. Yeah, Rashwa, you're loud and clear.
Sir, is I'm louder, sir.
Yes.
Sir, I have some doubts regarding the previous class of the money market instrument that you told in the last class.
Yeah, Rashwa, tell me.
Sir, in the money market instrument, you told the treasury bill. In treasury bill, there is a concept called competitive bidding and non-competitive bidding. In both what is the difference between them?
What's the difference between them? Rashwa, let me ask this question with the class itself. So, guys, consider this as a new question. What is the difference between competitive bidding process and non-competitive bidding process when the government is trying to issue their bills or bonds? Paridhi, would you like to try?
Yes, sir. So in competitive bidding, the major participants, those who participate in this are investment bank and commercial banks. In competitive bidding, they provide the quantity they want to buy and at what price they actually want to buy. Whereas when we talk about non-competitive bidding, the participants that are involved are small investors or retail investors. So in non-competitive bidding, they are only providing the quantity they want to buy and not the price at which they want to buy. So in case of non-competitive bidding, the quantity they want to buy is guaranteed to them. So they would pay the actually weighted average price on the basis of the price ranges that are being provided by the competitive bids.
Excellent, excellent. Okay, guys, this is how you should be answering the questions. It was very clear, it was to the point and very precise. Okay, so we don't need to go here and there. Just be precise with exactly what is asked, and if you are clear in the concept, you will be able to answer it very precisely.
Sir, I have one more question. Sir.
Excellent, Paridhi, very good. So, Reswal, is your doubt clear
Yes,
now?
sir.
Okay.
Sir, I have one more question.
Yeah, go ahead.
Repurchase agreement versus haircut margin.
Purchase agreement versus haircut margin.
Yes, sir.
That's not a question. Uh, do you want to understand what is the concept of haircut or margin in repo agreements?
No, no, sir. Concept is not clear properly to me, sir.
Entire repo agreement.
There is a doubt.
Guys, anybody would like to take that question? What is a repo agreement? How does it work? And what is the concept of haircut or margin in the repo agreement? You can frame your answer and then you can try this. Anushka, would you like to go ahead?
So haircuts, they offer protection to the lender if the borrower goes into bankruptcy or if it defaults.
What does collateral do?
Sir, in haircut margin, if borrower wants to borrow some money from the
Parichay, let Anushka, I asked her. Anushka, what does collateral do? See guys, what Anushka said is correct, but collateral also does the same. So what you can say in case of haircut or margin is that it gives the lender the extra protection apart from the collateral. So in case the value of collateral goes up or down, the haircut or margin is there to protect the lender in terms of fluctuations of the value of the collateral. Okay. It's like, guys, have you ever taken a loan from a gold financing company? Or let's say Muthoot Finance or Manappuram Finance. Have you ever tried to take a loan from them?
Yes, sir. Muthoot Finance.
Muthoot Finance, okay. So what they do is they take gold from you and they give you the loan. Okay. So let's say you give the loan of, you give the gold of 10 lakh rupees to them. How much loan would you get? Give
Lower
them
than
gold.
lower than 10 lakh.
Lower than 10 lakh, right? So you will get a, let's say, a loan of 8 lakh. They will give you 8 lakh rupees in cash if you give them 10 lakh worth of gold. So what is that remaining 2 lakh? That is like a haircut on margin. Okay, so it's like an extra protection.
Sir, in this borrower can be anyone. Retail also borrower in this repurchase and haircut.
Retail won't be there. Can be anyone, okay, it's not a restriction as such, but retail will not be there. Okay, so guys, haircut or margin is like the extra protection you are giving to the lender in case the value of collateral goes up. Okay, in repo agreement, it will always be in the form of cash. Okay? So it's, let's say, 10% haircut, that means 10% extra collateral you have to pay in the form of cash to protect the lender from fluctuations in the value of the collateral. Okay. Now, guys, what is the repo agreement and how does it work?
Sir, where borrower would lend government securities to the lender.
Mansi, you have to raise hand and I'll ask you. Okay? If everybody speaks at one time, I'm not able to listen. Moksha, would you like to try this?
Yes, sir. So repo rate is also known as the repurchase rate. So basically, when the lenders lend money to borrower against a collateral, usually offer government securities for collateral. Then, when the maturity is done, the securities are transferred back to the borrower, and when the borrower pays money, so that is called the repo rate for the borrower because he basically repurchases securities back.
That's correct. Most well done.
Sir, I have one question, sir.
Yeah, yes, sir. First of all, your doubt of repo agreement is clear or not?
Not clear, sir.
Not clear. Okay. What is the doubt?
Sir, in this agreement, repurchase agreement, the borrower is the borrowing some money from the government, right?
Lender can be anybody, borrower can be anybody. Okay.
Borrower can lend the collateral to the government, and at the last, he gets some interest plus fund that he pay to the government.
Investor can be anybody. Okay. It need not be government.
But sir, why retail is not here in the very large?
See, do you have enough government securities?
No, sir.
You need to put the government securities as collateral. If you don't have enough government securities, can you participate?
Sir, I have to collateral any shares, sir, equity share.
Very rare. Okay. Though it depends upon the two parties, but the other party wants to be safe. Okay. Share is not considered to be safe. Why would you take something as collateral which is not safe itself? Yeah. So you would like to have something as collateral which is very safe, on which you can rely upon. That's why we use government securities. Okay, you can lend your shares and borrow. That is a different concept. That is not a repo agreement. Okay.
Sir, I not understand the interest element in this. What is the interest element?
Interest element. Okay, let's suppose you take the loan of 300 million from a party. Okay, let's suppose you take a loan of 10 lakh rupees from Muthoot Finance. Okay, after 1 year, do you need to pay 10 lakh rupees or more than that?
More than that, sir.
Why?
So there is an interest element we have to repay to the Muthoot.
And that is what Muthoot is earning, right?
So
Muthoot is not.
in which we can margin more, that is haircut margin, to safeguard the lender interest.
Margin would be decided between the two parties. Usually it will be 10%.
Okay.
Okay. Margin would also be returned by the lender. It is just to protect the lender. It is not the earning of the lender. Okay. Earning or the return for the lender would be the interest they get. Okay.
Okay, sir.
Parichay, would you like to explain the repo agreement as a whole?
So actually, I'm not clear about repo agreement, but I can give it a try.
Your hand is raised. Okay. So
may I?
Yeah, please go.
So in repo agreement, when buyers buy the securities from the issuer, then it is an agreement signed between them. In that, in future, the seller will repurchase it from the buyer.
Okay. Pariji, would you like to add to something what Pariji said?
Okay, so repurchase agreement or a repo agreement, for example, it's an agreement between the bank and an RBI. So if we are talking about commercial bank and RBI, so it's an agreement in which the commercial bank, what do? If they are in a liquidity crunch, they may ask for some money from the RBI by issuing government securities to them with a promise that they will be purchasing these government security at the time when they will be paying the amount they have borrowed with some interest for the time being they have borrowed this amount. So the commercial bank pays back to RBI is the principal amount that they have taken and the interest. and they then what do? They take back their government securities from the RBI.
Yes, exactly. That's good. Okay, just to add, there is when the borrower is borrowing funds from the lender, the borrower needs to deposit a collateral as well as a haircut with the lender, and the lender would give the person the loan. Okay, the amount he wants to borrow. Now, at the end of this agreement, the lender would return back the collateral as well as the haircut, and in return, borrower would pay him the money which he took earlier along with the interest on that money. Okay, so the collateral and the haircut in this agreement acts as the protection to the lender so that the other party does not default or okay. So these agreements are more popular when there is a liquidity crunch in the market. At that time, the lenders would ask for deposits as collaterals. So at that time, these instruments would be used more frequently as compared to normal. Okay. Rizwal, are we clear?
Yes, sir.
Oh, good. What are the 5 pillars of the financial system? Very easy question. Rizwan, you want to try this?
Sir, what is the question?
Buddy, you raised your hand without even knowing the question.
Sir, I raised in the previous question. You asked.
But I'm saying when the question is done, you have to take your hand down. Okay, otherwise it will create a confusion. My question is, what are the 5 pillars of the financial system?
Sir, in a robust financial system, we ensure that there is enough liquidity in the market, the proper allocation of funds.
Rizwal, I'm asking, what are the 5 pillars of the financial system?
The 5 pillars are financial participants, market, products, regulators, and services.
Yeah, good. Okay. My next question is, guys, what would we call a robust financial institution, or what do we mean by a robust financial institution system, financial system?
So it means strong financial system.
As well, I'll ask the person. Okay, you can only raise it. Yogita, would you like to try this?
Sir, robust means strong and healthy, and we need a robust financial system because to have ensure enough liquidity, proper allocation of funds, good infrastructure, and low transaction cost.
Okay. What do we mean by liquidity? What do we mean by
Audible?
Yogita? Yeah, Yogita, I'm asking you. What do we mean by enough liquidity? Yogita, you are not audible as of now. Are you speaking?
Sir, you are not audible to me.
Yogita, I'm asking, what do we mean by ensuring enough liquidity?
Liquidity.
Yeah. You said
Okay.
that, yeah.
Liquidity means that there is enough cash in the market.
Okay.
Money supply, sir.
I mean, you have the idea, but you're not able to elaborate it properly. Okay. Reswal, what do you mean by ensuring enough liquidity?
Sir, here in robust financial system, the liquidity means there are enough number of buyer and seller, and the volume is large. We have to create so much of volume to trade in a economic manner.
The Draksh, what is the meaning of ensuring enough liquidity? When we talk about it in perspective of a financial system, what would you call liquidity? The Draksh.
So liquidity refers to that the asset can be converted into cash immediately.
Asset can be converted into. See guys, when you're talking about from financial perspective, financial system perspective, you can say that the financial system should ensure enough liquidity. That means whoever is in need of funds is able to get those funds, and whoever is having surplus funds has the option to invest those surplus funds. Okay, a robust financial system would ensure that if anyone wants to raise some funds, they have proper infrastructure, they have enough products to do so. Similarly, if somebody is having extra funds, they have enough options, they have the infrastructure available to invest those funds in whatever assets they want. Okay, that's what we mean by enough liquidity. What do we mean by proper allocation of funds? Again, same thing as you should be able to choose where you want to allocate the funds. Okay? So if you feel that for me, dividend is not a good option, I have the option to reinvest my dividends, or I have the option to choose those companies which don't give dividends. Okay, that's up to me. I should be able to choose, I should be able to allocate my funds as per my risk appetite, as per my return expectations. Then you should have good infrastructure and technology. Obviously, we want a good infrastructure to make sure that our money is secure. Okay.
Sir, I have to ask something to this.
As well, let me complete. Okay. Good infrastructure and technology means we should have proper exchanges, stock exchanges. We should have a clearing house. We should have the net banking facility, so that everybody can participate in the market from far away places also. Okay, and the infrastructure should be strong enough that there is no risk when our money is flowing from one end to other, and there should be technological advancements in terms of how easy it is. Okay, for example, I can trade on the basis of one click. That's technology, right? So it should be convenient for everybody to participate wherever they are. Yeah, right. So you can ask.
Sir, in second point, the proper allocation of funds. So, what are the different channels we can allocate the fund in an economy? Sir, how to boost it?
See, that's up to the investor how he wants to allocate funds. Okay, for example, I want to allocate my funds in setting up a factory. Okay, so I should be able to set up a factory. I want to invest my money in stock market. I should be able to do it. I want to invest my money in gold. I should be able to do it. That's what we do. Okay, so it should be, financial system should be robust enough that it gives you all these options. Okay, at low transaction cost. The transaction cost should not be. Are you getting me?
Yes, sir.
All right, guys. Next is, what is the difference between capital markets and money markets? Who has not answered? Paricha, would you like to go?
Yes, sir.
Yeah.
So in capital market, the maturity period is more than 1 year, and in money market, it is less than 1 year. The money market instruments are generally CDs, CPs, treasury bills, and in capital market, the instruments are stocks, bonds.
Okay. Right. Paricha, you are right. Maybe you can elaborate your answer more, okay? But I think you have the idea. You are on the right track.
Yes, I don't know how to
Moksha,
elaborate.
no worries. You will be able to develop that skill, but you have to speak more, okay? So whenever in the sessions I ask you questions, try to answer them. That's how you will develop the skill of answering it in a better way. Okay.
Okay, sir.
Maybe you can try to look at how I answer or how any student in the class answers. When you are able to understand it, that's the correct answer. Okay. Moksha, would you like to add what Paricha said?
Yes, so the instruments in capital market are equities and bonds, and in money market it's treasury bills, certificates of deposit, CP commercial paper, and capital market is further divided into the two sectors: primary market and secondary market.
Okay. See guys, I'll give you an example. For example, if it is asked what is the difference between capital and money markets, you can say that as we know, there are borrowers in the market. Now, the corporations, governments or institutions which wants to raise funds may want to raise it for less than 1 year or may want to raise it for more than 1 year. Okay. Capital market is the market which is used when the borrower wants to raise funds for more than 1 year, whereas if the borrower wants to raise funds for less than 1 year, we call it the money. Okay. Now, to raise funds for more than 1 year in capital markets, you have different instruments such as equities and bonds. Whereas to raise funds for less than 1 year, you have different instruments such as treasury bills, commercial paper, certificate of deposits, right? Now, in capital markets, we see the participation by both retail investors, individuals, as well as institutional investors, whereas in money market, they are predominantly dominated by, they are primarily dominated by large institutions. Okay, retail participation is almost negligible. Yeah, the transaction sizes is larger in money markets, whereas the transaction size can be smaller in money markets also. So these are some of the differences. Are we clear with the answer, guys?
Sir, can we say that capital markets are more riskier and gives more return than money market?
Yeah, you can say that, but you should be able to elaborate in case the person asks, why do you think it is more risky, the capital markets as compared to money markets? What do you say?
Sir, because of the time period, it's for more than 1 year.
Okay, so first of all, the time period is less. It's like you are just exchanging the funds for a month or 2 or 6 months or less than 1 year. And usually the banks are the major participants, or financial institutions or corporates are the participants. So we don't expect them to be fair. Okay? So consider them safer than capital markets. That's fine, you can say that. Okay, but first cover the main points. For example, the duration, the type of participants, the instruments. Don't miss on these points. Then you can add functions. Okay. All right, guys. So, what is the difference between a primary market and secondary market? We have Zenith. Zenith, would you like to try this? Zenith, would you like to try? What is the difference between the primary market and secondary market?
Hello.
Yes, please go ahead.
Primary market is a capital market, deal with the issuance of new securities. It's a long-term equity capital. And if we talk about secondary market cover equity market and debt market, such as stock, bond, option, future bought, and sold. That's all.
That's correct. Right. Anybody would like to add anything?
Or may I?
Is this
Paridhi.
Aditi? Yeah, go ahead.
So primary markets are the market where the securities are issued for the very first time. Whereas in case of secondary market, the securities are traded that are already which are already issued in primary market. So the another name of primary market, we can say new issue market. The types of product that are issued in primary markets are generally the IPOs and FPOs. Whereas in secondary market, we can see various instruments such as share, warrants, derivatives, and etc. When we talk about the price in primary market, the company sells the share to the investor at a fixed price. But when we talk about the secondary market, the prices are dependent upon the demand and supply. So the price keeps on changing in secondary market, whereas in primary market, it is fixed. And the parties which are involved in primary market are the companies and the investors, whereas in secondary market, investors buys and sell among themselves. So there is no participation of the company in secondary market.
Okay. Guys, that's.
Sir, I can add something.
Yeah, so.
Sir, in the primary market, the issuance is for the. Sir, can I go?
Yeah.
Sir, in the primary market, the company's issuance for the first time the equity offers to the public through IPO. But sir, in the secondary market, sir, after the IPO in the public stock exchanges, sir.
Yeah, results you covered that.
And
point,
in the IPO, in the IPO market, they shares are issued at the fixed price and book building price. Book building price, the company got a price band is in which the investor has to bid in a multiple lots.
See guys, when you talk about primary markets and secondary markets, first of all, don't restrict yourself to equities. Okay? Primary market is that market where the issuer or the borrower raises funds by issuing the securities. Okay? It can be through a private placement. Okay? The borrower is directly going to the investor and privately placing the securities with the investor. It can be preferential issues are also an example of primary market. Qualified institutional placements are also an example. Rights issue are all examples of primary markets. Okay, money goes from the investor directly to the borrower. Okay, even if the bonds are issued by the company to the investor, that is also primary market. So basically, the concept is that the borrower itself is getting the funds from the investors by issuing the securities. That's primary. Now, once the securities are issued by the borrower, those securities may change hands between the investors. Okay. In this case, investors are exchanging the securities between themselves. The company is not involved. That's what we call the secondary market. Okay, that's what we call the secondary market, where the buying and selling of securities after they are issued by the company happens between the investors. That is. Are we clear with the concept, guys?
Yes, sir.
All right. What is the order-driven market? What is the OTC market?
Sir, can you repeat the question?
Yeah, my question is, what are the features of the OTC market? Okay, I'm asking about the code-driven market, guys. OTC market. What are the features of OTC market? Diksha, would you like to try?
The OTC market is a market in which participants trade stocks, commodities, and directly between two parties. So there is no exchange or broker involved, that is the intermediate party. And it is done on electronic basis, so there is no physical location involved. And it basically deals as a market maker by quoting prices which they buy and sell a security, and there is lack of information in OTC market without being aware of the price at which the transaction was completed.
Okay. Diksha, all right. Mansi, would you like to add something?
Sir, where trading is done directly between the two parties, where there is no central location in these. Investor reaching out to the dealer directly, and the counterparty is known in the OTC, and there's no price transparency in the OTC.
See,
and the
guys,
settlement is also not guaranteed, sir.
yeah. Okay. Now, if I ask you, why do you say settlement is not guaranteed, Mansi?
What, sir?
Why do you say the settlement is not guaranteed?
Sir, at the time of the settlement, one party would be gain and other party would be in a loss.
So
the settlement is not guaranteed in.
See, guys, you maybe when it is asked, tell me some features of OTC market, you can mention 3-4 features, but try to add one line description to that feature. Okay. Just a second. See, guys, you can mention 2-3 points, but you have to be clear in terms of describing them. Okay. For example, let's say if I say that the OTC markets, one of the features is price transparency. Okay. You don't have the price transparency in case of OTC markets. Why? Because you don't have the order book in front of you. For example, equities are traded on exchange. Okay, so we know all the buyers and sellers at what price they are ready to buy and sell. Okay, we have the whole order book in front of us. We know at what price this is being currently paid. Whereas in the OTC market, there is no price transparency. These are like negotiated contracts between the two parties, and the two parties know the exact price. Yeah, not everybody in the world would be aware what is the price at which the trade is currently happening. Okay, there is no order book published in front of you where you say that okay, these are the people, these are the number of shares which are being tried to be bought at this price. These are the number of sell orders. You don't have the order book in front of you. You don't know what is the exact price at which this instrument is traded, unlike exchange traded. Okay, and we say order execution is guaranteed here, but the settlement is not guaranteed. Why is order execution guaranteed? Because the two parties are sitting across the table and executing the order. Okay, so they will negotiate the price which is suitable for both, and the order will get executed. But the settlement is not guaranteed because later on the other party can default if they are not in a financial position or they are facing huge losses. They may not honor the commitment, and it's a counterparty which can default. It's not like a exchange or a clearing house which we don't expect to default. Okay, there is no exchange or clearing house involved here. It's between the two parties, and any party can default. That's why we say order settlement is not. Okay, and guys, these are negotiated or customized contracts between the parties, whereas in exchange traded market we have the standardized contracts. Anybody who wants to take a position can take a position in that standardized contract, but you cannot change the terms and conditions of the contract, whereas you can negotiate or change the terms and conditions of the contracts in the OTC. And obviously the counterparty is known. You are sitting across the table and dealing, whereas when you place an order on the stock exchange, you don't know who's the counterparty. Okay, are we clear, guys?
Sir, I have one question.
Yeah, that's right. Yeah, that's right. Go ahead.
Sir, in exchange traded, the order execution is not guaranteed. But the sir, order
Yes.
execution is guaranteed by the broker, sir. So why the order execution is not guaranteed?
Why do we say order execution is not guaranteed is you place an order, it may not get executed. For example, if I place an order to buy Maruti shares at 1,000 rupees per share, would my order get executed?
Sir, it depends on the number of buyer and sellers in which share they are traded. That's why the order execution is not guaranteed.
Exactly, but it's not guaranteed, right? It's not guaranteed. If your price comes, your order would get executed. If it doesn't come, it will not get executed, right? That's why I say that. Okay. Guys, let's just give me 2 minutes. I'll be back. Okay? Okay. Guys, next question is what is the role of a broker and a dealer in the financial market? Okay. How is the role of a broker different from a dealer in the financial market? Yeah, Razwal, you want to try?
Can I try, sir?
Yeah, Razwal.
Sir, broker finds the counterparty between the buyer and seller. They are selling of securities and purchasing securities in equity market. We have the broker to find out. Broker has to find out the buyer and seller.
Okay, Razwal, I see one limitation when you answer the questions. You always take it to equity. Okay, try to answer in a more broader way, not just in terms of equity.
Sir, actually my lack of English, sir, is not improving. Sir, dealer becomes the counterparty. The buyer and seller becomes the counterparty in which.
Yeah, Razwal, you got my point. Okay, if you try to answer in a only equity way, that will not give a clear picture. Okay, so try to answer in a more broad way. What is a broker and what is a dealer? Zeenat, would you like to try?
Brokers facilitate buying and selling stock markets. Somewhere it's a
Zeenat, go on.
sorry, sir, actually I'm trying to get
Okay.
answers.
Anushka, would you like to try?
So the broker is a person who executes the trade on behalf of others, whereas a dealer is a person who trades on their own behalf.
Guys, I mean, again, the clarity is lacking. Okay, please try to answer the questions in a way that it shows that you are doing it. For example, let's say again, I'll try to answer. How is a broker different from a dealer? Broker is someone who tries to find a counterparty for it. Okay. For example, if I want to sell my house, I'll tell the broker that I want to sell a house. What he will do is he will find a counterparty, he will try to find a buyer for it. Okay. Whereas dealer is someone who deals with you. Okay. For example, if I want to buy foreign exchange, I go to HDFC Bank. HDFC Bank will sell me the foreign exchange, the currency. Yeah. So dealer is someone who is directly dealing with you, whereas broker is someone who is just trying to find a counterparty for you who will deal with you. Okay. Are we clear, guys?
Yes, sir.
Good. What is the role of stock exchange in the financial market?
To track the performance.
Track the performance of what? I'm asking about the stock exchange.
Stock exchange is a platform investors and invest in its.
Mansi, would you like to try?
So stock exchange is a marketplace and platform where trading takes place between buyer and seller.
Yes, right. Okay. That's basically correct. And maybe you can give examples. Okay. Suppose my answer is very short. I can try to add more to it by giving them, for example, in India, we have NSE and BSE. In America, we have the NASDAQ and AMAX and New York Stock Exchange. So that gives the clarity to the interviewer that you are really clear with what is being asked. Okay. Diksha, would you like to try this question? What is the role of stock exchange?
The stock exchange is the market where public listed companies are traded. It's a place where public listed companies are traded. For example, in New York Stock Exchange.
Guys, again, you are going back to equities. Okay. I mean, yeah, just say that equity, don't use the word equities in every answer. Okay. I mean, I understand we have a lot of idea about equity. That's why we try to relate everything. But you have to think from a more broader perspective. Okay? Stock exchange is the marketplace or it's the platform where the buy and sell orders are matched based on the rules. Okay, so it's like a central location for the buyers and sellers where all the orders from the participants come and they are matched and executed. That platform is known as a stock exchange. For example, in India, we have a CBSE, in America, we have this and that. So try to give it that answer. Okay. Anybody aware about what are the rules? How are the orders executed or matched? I think we have not discussed that. So we'll discuss it later. What is the process of novation when we talk about clearinghouse? What is the process of novation?
So can you please repeat the question?
What is the process of novation? N-O-V-A-T-I-O-N when we talk about clearinghouse.
Can I answer?
Yeah, this will try.
Sir, it's a bilateral transaction between the buyer and the seller in the clearing houses. Arrangement are given by the clearing houses. That's an innovation.
No, guys, again incomplete. Okay, I'm sorry, guys, but you need to work hard. Except from a few candidates, I'm not getting the kind of answers which I would like. Okay, it's not something which we have not discussed. It's just that you are not revising the concepts for it. Okay, guys, how I'll explain novation is once the order is executed, once the order is matched by the stock exchange, then that trade is transferred to the clearinghouse. Okay, what clearinghouse does is it becomes a counterparty for both the parties. So the trade is split, okay, and clearinghouse gets in between and becomes a buyer for the seller and a seller for the buyer. Okay, this process is known as novation.
Sir, can you repeat the answer?
Yeah. See, there is a stock exchange and then comes the clearinghouse. So what happens? Stock exchange matches the order. It matches the buy and sell orders. Once the trade is matched and executed, that trade is passed to the clearinghouse. Now, clearinghouse takes the ownership of that trade. What it does is it splits the trade into two parts. Okay, for a buyer, it becomes the seller, and for a seller, it becomes the buyer. So it becomes the counterparty for both the buyer and seller. That process is known as novation. Is it clear? Is it clear, guys?
Yes,
sir.
Guys, we have discussed all this. Okay, if you are not able to answer, that's your fault. And it's going to impact you guys. Don't take it lightly. I mean, we are having this session to see where the candidates stand and you can figure out yourself where you stand. Okay? It's fine if you are not able to give the answers, make all the mistakes, not a problem here, guys. But once you go to the company interviews and you answer like this, I'm afraid they might not say. Okay? Then don't come back and say that placement is guaranteed. Why are we not getting the placement? So guys, you can do everything, but you have to put all the efforts yourself. Hope it's clear. So that's about it from our financial system introduction. Now let's complete these. Can you tell me, guys, what are the advantages or disadvantages of investing in equities? Now we are
Can you
talking about
please repeat the question?
Yeah. So I'm asking questions from cash equities now. I want to ask you, what is the advantage or disadvantage of becoming an equity shareholder? Is my question clear to everyone?
Yes, sir.
Yes, sir.
Okay. Yeah. Ashutosh, would you like to try?
Yes, sir. Sir, advantages of becoming an equity shareholder. The first one is ownership. You become a part owner of the company. Second is voting rights. You get the voting rights to take part in the decision-making process. Third is dividends. You get dividend payments when the company decides to pay the dividends. Capital appreciation. It means that if the share prices go up, the amount you invested will also go up. Limited liability. In case of dissolution of the company, there is a limit. There is no liability towards the equity shareholder. And the last one is transferability. This means that you can transfer your shares anytime. So the disadvantages of becoming an equity shareholder are they get the last preference. They get the last preference in terms of when you get the dividends and when there is liquidation of the company. The second one is there is uncertainty about dividends. You do not get dividends all the time. Third is capital depreciation. As there is capital appreciation when the prices go up of the shares, there is capital depreciation. That means that the prices of shares can also go down. The fourth disadvantage is that we are just the part owners. We cannot wholly be responsible for the decision making of the company. Transferability, it means that it's not always easy to transfer the shares. For example, if the market has if the share prices of the stock has crashed, so it's difficult for them to sell the shares at that time. So that's it.
Okay. Good, Ashutosh. Moksha, would you like to add anything? Or you can just try to answer the question from the scratch, Moksha. Let me shorten the question. Okay. Moksha, what are the disadvantages of investing in equity share, of becoming an equity shareholder? What are the disadvantages? Moksha, are you there?
Sir, can you ask someone? Actually, my earbuds got disconnected. They are charging. I'll answer in a bit.
Sure, sure. No problem. Maricha, would you like to answer this?
So can you please repeat the question?
Yeah, I'm asking what are the disadvantages of becoming a equity investor?
Sir, the voting right would be limited if, as you are the part owner of the company, and so transferability can be difficult, as if, for an example, if you are thinking that the prices of share in future will go down, then there's someone that is thinking the same way, so it would be difficult to transfer the shares.
Okay. Right.
Capital depreciation also can happen, as the shares could, as the stock market could crash, so capital depreciation can also take place.
Okay. Reswal, would you like to answer this question? What are the disadvantages of becoming an equity shareholder?
Sir, one disadvantage is transferability. If all the buyer and seller are bearish, that there is difficult to sell.
Okay.
If there is a bad news, fraud in the companies, big losses, and the major scams is going on. Sir, I just asked you questions, sir. If we are just a part owner, sir, why this is just a disadvantage of equity shareholder? Because, sir, in equity, part ownership is the
Voting rights are limited to the ownership you have. Okay. If you are the part owner, you cannot really influence the decisions of the company because you are just holding a few shares, right?
Sir, that's the company raises because of the part ownership they issued in the market.
Sorry, Rajwan, what did you say?
Sir, that's why the company issues in, shares in the market, sir, just because we are a part owner. So why this is a disadvantage?
Yeah. See, think from our perspective, why it is a disadvantage is that although we say we are the owners, right? We are the part owners, we have the voting rights and all, but do you really have the power to do anything?
No, sir.
If you buy 100 shares of Asian Paints, can you influence any decision what the company is making?
Sir, we can talk to the management through conference calls.
They will ask you to vote. Okay, how many votes do you have? 100 out of 10 million. Would it make a difference?
No, sir.
That's the point. Okay? All right. Ashutosh, would you like to add to what Paricha said? I think you have answered, right?
Yes, sir.
Yeah. So, guys, you are right, but just again try to elaborate more. Right? If you invest in equity shares, first of all, there is a risk, right? That's the biggest disadvantage. There is so much risk, there is so much uncertainty. We don't know whether we are going to get dividends or not. For example, Microsoft paid their first dividend after 17 years. So till 17 years, there were no dividend returns. So we cannot be sure whether the company is going to pay dividends or not and how much they are going to pay. We're not sure. Also, we're not sure whether the stock price would appreciate or depreciate. Yeah. So you don't know that. Right? So that risk, that uncertainty is the biggest disadvantage of investing in shares of any company. Yeah, along with other disadvantages such as we have very limited voting rights, or it becomes difficult to transfer the shares when we really want to. For example, if there is any negative news, the transferability will become very difficult when you really want to transfer. Yeah, and in terms of liquidation, when the liquidation of a company may happen, the equity shareholder will be the last person who will get any money if something is happening. Otherwise, it will go down to zero. That's the disadvantage. Guys, always talk about in terms of risk. Yeah. How are the preference shares different from common shares? How are the preference shares different from common shares? Okay, who is there?
So can you please repeat the question?
Yeah, it's how is the preference shares different from common shares? Okay, Reswal, would you like to try?
Sir, at the time of liquidation, they get the first preference to get the money back. They have no voting rights.
Who gets the first preference?
Preference shareholder.
They don't get the first preference, buddy. First preference goes to secured debt providers, then unsecured debt providers, then preference. So what we need to say is they get a preference over the common shares at the time of liquidation. Okay.
Sir, they have no voting right as in case of equity shareholder common shares.
They have voting rights, but they can only vote in those matters which influence the preference shares of the company. Okay. Resol, you need to be clear, buddy. Yogita, would you like to try?
Sir, preference shares are the shares which carry preferential rights regards to payments of dividends and on repayment of capital in case of winding up of the company, and they get fixed dividends.
Yeah. Okay, that's a good answer, but you can elaborate a little. Okay, so you can say, guys, in case of preference shareholders, we have mostly a fixed dividend which is paid, okay, which is a percentage of par value which is committed by the company at the time of issuance of the shares. So we are certain in terms of the amount of dividends we are going to get. Unlike equity shares, unlike common shares, where we are not certain what is the dividend we are going to get. Also, we get preference in terms of liquidation. They get a preference, they are paid before the common share. But limitation is that you have very limited voting rights. You cannot vote in every matter of the company. You can only vote in those matters which concern the preference shares. Okay, and you don't really get to participate in the growth of the company. Okay, you will get your fixed dividends. But apart from that, there are no further returns of investing in preference shares, whereas in equity shares, you get dividends as well as capital. Okay. All right. What is the difference between cumulative and non-cumulative preference shares? What is the difference between cumulative and non-cumulative preference shares? See, guys, I hope you. It's not about. I'm trying to judge you or anything, guys. Please take this session as a session where you are learning how to answer the questions. It's like an interview preparation for you. Okay, we are not only revising the concepts, but we are focusing on how should we answer, how can we differentiate ourselves from just a graduate, how can we answer in a better way, so that we are able to differentiate ourselves from other candidates in the conclusion. Okay, so the takeaway should be, we should be clear with the concepts and we should describe the concept and then try to give an example. Okay, guys, we are having this question and answer round just to find out where we are lacking in terms of answering the questions. so that it helps you in the interview. Guys, if you do it seriously, if you learn from it, definitely it will help you in the interview process. Please take it positively and try to answer the questions like I'm trying to answer, or like the way you feel is complete and clear. Okay. What is the difference between cumulative and non-cumulative? Mansi, would you like to tell?
Sir, in the cumulative preference shares, if the company faces loss, they don't give a dividend in this year, they pay it in the next year. But in the non-cumulative preference shares, if the company faces any loss, they don't give any dividend to the shareholder.
Yeah, Mansi, good. Okay, that's a good answer. Basically, you can say that in cumulative preference shares, you get the missed dividends. For example, if dividends are not paid for 2 years, in the third year, you will get all the unpaid dividends as well. But in non-cumulative, if the dividend is missed, not paid, you will not get it. As simple as that. Good answer, Mansi. What is the difference between participating and non-participating shares? Guys, I see some people, for example, Nasreen, I don't think you have answered. Praveen, you have not answered. Guys, please try to answer, okay? Otherwise, you will not find out where you are lacking. Okay, Ashutosh, would you like to go for this? What is the difference between participating and non-participating preference?
Yes, sir. Participating preference shares are those where the company in the year of good profits can decide and pay more than the fixed dividend. And in case of non-participating shares, they are those shares who will get fixed dividend if there is good profits or not.
What do you mean by good profits?
Yes, sir.
What do you mean by good profits?
So good profits means if there are more than expected profit.
So in case of participating shares, you not only get the fixed dividend, but you are also eligible to get extra dividend in case the company does very good. So it's like you are able to participate in the growth of the company by getting extra returns when the company does well. Whereas in non-participating, you only get the fixed amount of dividends. You don't get the extra dividends. Coming to IPO, what is the meaning of IPO? And let's start with this. Okay? What is that? What is our understanding of IPO?
So your voice is very low.
Please check now.
So there is some kind of breakage in your voice.
Yeah, please check now. Is it better?
Yes, sir.
Okay. I'm asking, what is the meaning of IPO? Okay, Moksh.
Yeah, so IPO is also known as initial public offering. It is a way used by companies like the public to raise money through equity or debt.
Anushka.
So they are the shares of unlisted public company, and when they are sold to the public at large for the first time, then it's known as IPO.
Yogita.
Sir, when the private company issues shares to the general public for the first time, it is known as initial public offering, and it converts the private company to a public company.
Good answer. Okay. So guys, you can add a couple of points like that. When the private company issues the shares to the general public for the very first time, it is known as IPO. Whenever they issue the shares second time to the general public or after that, it is known as a FPO. Okay. Is it a primary market transaction or is it a secondary market transaction?
So IPO is the primary market.
Right.
The primary market.
FPO is the secondary.
Why would a company go for IPO? Can you get me
So
four reasons?
to raise additional capital for growth and expansion, to capture the large market size.
Raise funds and grow the company. One reason is that.
For paying their debt and for exiting of previous investors.
Right, is the reason could be that they want to
The
get rid of
publicity.
debt. Publicity could be the reason. So
Valuation purpose.
valuation generally increases. That's correct. For example, Zomato recently came out with IPO and they are now one of the top 200 companies of India in terms of market cap. Guys, would the company always get the money if they go for IPO?
No, sir.
Issue can be undersubscribed.
Praveen, would you like to take this question? Would the company always get the money if they go for IPO?
It is not certain, sir.
Yeah, please explain.
It's not always certain that they will get the they'll get the required funds at every IPO.
Why do you think so?
It depends on the fundamentals of the company that is going for IPO for the first time.
No, I'm not asking in terms of whether they will get the subscription or not. Okay, I'm asking whether if the IPO is successful, would the company get the funds always or not?
They might not get the full fund, like they might not get the subscribe from the not sure, sir, not actually sure.
Stop. Anushka? See guys, if existing shareholders are exiting, they would get the money. If the company is issuing new shares to the public, then they would get the money. Whereas if only the existing
Your voice
shares,
is too low, sir.
okay, please check now. Is it better? Guys, is everyone able to hear me?
Yes, sir,
Yes,
it's
sir.
better.
Yes.
See, what I'm saying is, let's say the existing shareholders such as private equity firms or angel investors are holding the shares and they are selling their shares. Okay, company is not issuing any new shares. It's just that they are trying to exit the shareholding of the company. They are trying to sell their shares, so they would get the money. The company would not get the money. Okay, so it's not always the company would get the money. If existing shareholders are exiting, and that's the only shares that are being sold to the public, only those shareholders would eventually get the money. Company would not get the money. Got it? All right, guys.
Yes.
So let's take a break here, and
Sir,
then
I have one question, sir.
yeah, that's right.
Sir, why if the The IPO can be of two perspectives: for the exit for the equity for the shareholders of the private equity like venture capitalists, and for the fresh issue of equity shares.
Yeah.
Sir, sir, if the private equity are investing in a small ventures like in a startups, if they want to exit in a very lesser period, so how they can approach the
No,
startups
no.
to go?
Generally, they don't try to exit within a very short period. They try to keep the shares for, let's say, 3 years, 5 years, 10 years. Okay? But IPO is one of the route through which they can exit. They can also send the shares to somebody else through like a private sale. But IPO is like you are selling the shares to the general. So IPO is one of the ways for the existing shareholders to exit. In that case, they will get.
Okay, sir.
Okay. All right, guys. Let's take a break. We will regather at 11:30, and then we'll continue with the questions of remaining topics. Let's continue, guys. Everyone, please come back.
Yes, sir. So I have a question.
Yeah, please ask.
So inflation index bonds and clean price and dirty price.
Okay, don't worry, we'll come to that. Okay, we'll discuss it.
Okay.
All right. What is the purpose of book building and what is the purpose of road shows in the IPO process, guys? What is the purpose of doing road shows in the IPO process of a company? Mansi, would you like to try this?
Sir, in roadshows and book building, IB would set up the meeting at a various locations like Mumbai, Delhi, to try to generate an interest on a people about the company.
Yes, very good. Okay, that's a very good answer, guys. Basically, what happens is they'll set up meetings across the market in which they want to float the IPO. For example, they'll set up meetings in Delhi, Mumbai, Bangalore, Chennai, at various places on different dates, and they would invite all the potential investors to come and discuss about the company. Okay, so there they will try to market the company or publicize the company's management, growth prospects, products and services, etc., and show them how attractive investment it is, so that they can generate interest from the market and collect bids from them. Got it? Good. What is the role of an underwriter? What do we mean by underwriting that? Okay. Parichay.
So underwriters, investment banks and lead managers are all the same. And so their main function is to provide the company valuation and set up the price bands for an IPO. To check the company due diligences,
Okay.
to the RHP red herring prospectus.
Okay.
That's
Reswal, would you like to add something?
Sir, underwriter is a part of IPO process. In underwriting, they they are for a fixed commitment or a best effort. If the part of the IPO is not subscribed wholly or fully or undersubscribed, the underwriter may have fixed commitment to the investor to the company that I have to take certain amount of shares to be purchased from you, and other is I have purchased certain amount of percentage as set by the underwriter.
Okay. All right, guys. It can be on a fixed commitment basis or a best effort basis. In fixed commitment, they gave a commitment that the last 10% we would buy if there is not enough subscription from the market, we'll buy, don't worry. But in the best effort basis, they don't give you any commitment. Okay? What is the purpose of red herring prospectus document in the IPO process? What is the purpose of red herring prospectus? Paridhi?
Sir, a red herring prospectus have the complete information about the company along with its features, goal, and growth. About the business and promoter details, what are the competitive advantages and capital structure. So whenever an IB is approaching to the investors for the bidding process, or whenever they are motivating them for the IPO, they actually provide them, they show them this red herring prospectus so that they can get an insight about about the company as to what are they doing, what are their profitability, what are their previous financial statements, what are their future expansion growth. So they provide an insight about the company to then potential investors.
That's great. Right, it's an information document, guys, which needs to be floated out to the general public before going for the IPO, so that everybody can look at the details of the company and then decide whether they want to subscribe to the IPO or not. Okay, so it's like the private company has been private so far, so there is not much information about the company, right? So they are disclosing everything to the public that okay, this is who we are, this is what we do, this is the management, this is the these are the markets in which we are providing the products, these are our clients, this was our revenue, this was our profit. Now you decide whether you want to invest or not. Okay, so it's like an information document to the public so that they can look at it and decide whether they want to subscribe to the IPO. Okay, so this needs to be approved by the SEBI once, and then you can go ahead for the IPO. Okay.
Sir, draft red herring prospectus, also known as IPO note to the investor.
Is known as
IPO note.
IPO note, I think yes. I will need to check. Okay, I'm not percent sure, but maybe. You guys would need to do this. It just takes it. Okay. All right, guys, let's continue. So next question is what is a depository? What's the purpose of depository receipt? Very simple question, guys. What is a depository receipt? Why is it used? Okay, nobody's clear, I think. Praveen.
So depository receipts are the financial instruments that provides the opportunity for the domestic companies to invest in the to raise their funds from the foreign companies or foreign market.
Yeah, yeah, right. Okay. How does it work, guys? How is a sponsored ADR issue? How is a sponsored ADR issue? Zina, you have not answered questions. Would you like to try? See, some people are not active. I'm worried about them. Nasreen, Zina, Praveen, Rudraj. These are less active people. Okay, guys, you need to participate. I'll ask one of you now.
Sir, actually, मेरे concept इतने clear नहीं है, so that is the reason I will less participate.
Zinat, I understand, but why are they not clear?
Sir, actually, first class I'm not attending, and in the second class I'm sick a little bit, so that is the reason. And other two classes where I don't have such sources that I can go deeply in the concept. Like I don't access LMS. Today I am access. I talked to Amini and she helped me out. So that is the reason. But next time I'm sure I will participate definitely.
Zinat, I think you are not from the finance background. That's why.
Yeah, actually, I complete BCom honors, and it's completed since in 2017. I completed, and after that, I'm not attached to financial related subjects, so that is the reason.
Okay. So, Zinat, I understand your concern, but in case if you miss any class, or let's say you are not 100% clear with everything, you need to go through the recording, please. Okay, you need to maybe see the recording twice, and then look at LMS. And still, if you are not clear, you can ask me. Okay, but you need to put your extra. Okay. All right, good to know that next time you would be doing better. That's good. What about wait? What about others, guys? Nasri, sorry to point out, but guys, it's for your benefit. Okay. Nasri, Praveen, Rudraksh, where are you guys? What's happening, guys?
Yes, sir, my concept is are also not clear. That's why I'm not able to answer the questions.
But Nasri, have you attended all the lectures?
Yeah, I have attended all the lectures, but I can't be able to clear the concepts in that. I want to study from the basic.
Yeah, Nasreen. So we are trying to discuss everything from the basics itself.
Yeah, sir,
Okay.
I'm listening to them.
Yeah.
I'm trying to understand these questions and answer.
Yeah. And as you can see, your other classmates, they are able to answer the questions. Maybe not in a perfect manner, but they are still able to answer the question 50, 60, 70%, right?
Yes, sir.
So Nasreen, maybe you have to put in some extra effort. See, if you lag behind now, when we reach level 2 and level 3, you will feel you're left behind a lot. Okay, and then it will start becoming more and more difficult. So
Yes,
try
sir.
to catch up right now.
I'll
Okay?
try my from now.
Yeah, please. Otherwise, at the end, the objective, the reason why you paid money, why you enrolled in the course, everything will go for a waste. Okay? And we don't want that. So please understand your limitations and try to overcome those limitations. The company people will not listen to any excuse. Okay? Rudraksh, what about you?
Sure, actually, I know most of the answers, but I don't know how to explain them in a better way.
How would I know that you know the answer?
Sir,
How
I'm
would
raising
I?
my hand, but you are not picking me up.
Sorry?
Sir,
You're raising your hand, but I'm not giving you a chance.
Yeah.
Okay, so I'll give you a lot of chances right now. Okay.
Okay, thank you.
Who is left? Praveen. Praveen, you joined late. You said so. I hope you will be revising all the lectures again very soon.
Yes, sir. Sure, sir.
All right, guys. Let's go ahead with our sponsored ADRs. How does it work? How are they issued? Rudraksh, please start. Rudraksh, I'm asking you now, how does a sponsored ADR works?
So just a second. Sir, actually, I don't know this.
Okay, Moksh, would you like to try?
Yes, sir. I'm not that confident about that answer, but I'll try. So, in case of sponsored ADRs, like an Indian company will reach out to a custodian, which in further will issue shares to the foreign investors. Like in India, the custodian is HCHI, and then the foreign is DTCC. So yeah. So the if the Indian companies issue pays off dividend, so it can transfer the dividend to the foreign investors through the custodian. I'm not that confident about that answer, but I know this.
Okay. Parichay.
So sponsored ADRs are the ADRs that are issued by the custodians on behalf of the company, and in unsponsored they are issued without the consent of the company.
Okay.
And so in sponsored ADRs, it is issued on the exchange traded, and in unsponsored, it is issued in OTC market.
Sir, can you explain the concept of sponsored and unsponsored again?
Yeah, definitely. See what happens, guys. First of all, depository receipt is a financial instrument which is used by the companies to raise capital in foreign countries. So what happens is, let's say Infosys wants to raise capital in America, they will issue new shares to their custodian. That custodian will pass on those shares to the custodian sitting in the US. It would also be a depository, and the depository would issue the shares to the general public. Okay, so it's like American depository representatives are representing the equity shares of a Infosys. Yeah, so you get all the benefits like dividends, your capital appreciation, just like equity shares, but they are not called as equity shares, they are called as American depository shares. If this is issued in American market, it is known as ADR, American depository receipt. If it is issued in various markets, it is known as global depository receipt. If it is issued in India by a foreign company, let's say a US company, Microsoft wants to raise capital in India, they will issue IDRs, Indian depositories. Okay. So idea is that the company is issuing shares to the depository in the US and which is issuing the depository receipts. Okay. All right. Let's go ahead. How would you compare investing in bonds as compared to equities? What are the advantages or disadvantages of investing in bonds of a company? Rudraksh, would you like to try? Rudraksh, am I audible?
So can you repeat?
How would you compare investing in the bonds of a company versus the shares of a company?
Sir, bonds are a debt security under with the issuers owes the holders and a debt, and depending on the terms of the bond, and equities are the part value of a company, part ownership.
That's your answer. Anything else? Rudraksh, you need to study, okay? Yogita, would you like to answer this?
So equities are generally exchange traded and bonds are OTC. And equities are, we are part owners in case of share, in case of we buy equities, and in bonds we get no ownership. And in case of equity, we get voting rights. And in case of bonds, we don't get voting rights. There is a higher risk in equity, whereas there is a lower risk in bonds. Since there is a higher risk in equities, we get higher returns. And since there is a lower risk in bonds, we get lower returns. There is uncertain returns on the equity and fixed or regular payments on bonds. And at the time of liquidation, equity shareholders have the last preference, and whereas the bond shareholders have the first preference.
Yeah, good answer, Yogita. Well explained. Okay. All right, guys, let's move on to what is the difference between a callable bond and a puttable bond? What is the difference between the callable bond and the puttable?
So can I try?
Yeah, the Rudraksh.
Certain callable bonds, issuer has the right to redeem them, and we can say buy back or call them before the maturity period.
Okay,
And in puttable, investor has the right to put them, that is, sell them before maturity.
Okay. Why would a company call back the bonds? When would a company call back the bonds?
Suppose the face value increases.
Okay.
May I?
Yeah, Pariti, go ahead.
When the interest rate in the market is dropping, the company might redeem their bonds before the maturity.
Yeah.
As the other companies would be paying less interest to their investors.
Yes, that's correct. Good. All right. So please understand
Sir, I have a question, sir.
Yes, sir.
Sir, why company redeemed at premium only, sir, in this?
Because they are redeeming, okay? They cannot say we'll redeem at 900.
Because
Why
they
would somebody buy the bond of a company which can be redeemed at 900? If you are paying, let's say, 1,000 rupees for that bond, would you like it to be redeemed at 900?
no, sir.
Yeah, that's right. Okay. So to attract the investors, they would like to pay a premium.
Sir,
Okay.
from the perspective of investor point of view, they also get back at the premium maturity, sir.
Sorry.
Sir, sir, investors also get maturity of their bond at the premium, sir, from the investor point of view. Why they get maturity at face value?
Rizal, you're asking me the question or you're saying in general?
Sir, in general, I ask this question.
Okay. All right. Okay. Let's go ahead. What is that? A question came up related to inflation index bonds. Guys. What was the question? Who asked it?
So I asked the question about inflation index bond and plain price and dirty price.
Okay. Guys, first of all, let's take that question. What is the inflation index? Ashutosh, Rudraksh.
Sir, inflation index bonds are bonds in which the inflation rate is covered by the company. Suppose the inflation is at 3%, the company will give a margin of the principal amount plus 1 plus 3%.
Okay, that's it.
Yeah.
Okay. Who is left, guys? Anushka, have you answered questions?
Yes, sir.
Would you like to try this? What is the inflation index bond?
I'm not sure, but I'll give it.
Okay.
They cut out or they just kill the inflation risk of an investment.
Good. All right. Inflation index bonds are those bonds which compensate the investor for the inflation part. Okay. So what happens? The principal amount is readjusted every year on the basis of inflation. For example, if the inflation is 5%, principal amount would increase by 5%. And based on that new principal amount, the coupon payment is calculated. So coupon payment also becomes more as the principal increases in value, right? So basically what happens is as the inflation is there, the principal component and the coupon amount automatically increase to compensate the investor for the inflation, so that the real returns are not impacted. Are we clear with this now?
Yes, sir.
What is the accrued interest of bonds? Guys, again, I just see 4-5 hands, very mocks, very chair as well. very limited participation here. So I would like it to be more broad. Okay. Otherwise, I have to pinpoint and ask you questions. Okay. What is accrued interest? Reswal, would you like to try?
So in accrued interest, we have two concepts: clean price and dirty price. If the face value of the bond is like 1,000 rupees, and in clean price we does not get the interest on a certain period. But in the case of dirty price, we get a certain coupon rate at a fixed period. If they get redeemed, if the investor is redeemed before the maturity at any period of time, like 4 months to 6 months to 1 year.
Reswal, that is a completely wrong answer. Okay? I asked you, what do you mean by accrued interest? Anushka, would you like to try this?
So accrued interest is which we have earned, but it has not been paid. I mean, which has been due but not paid. And clean price, it does not include the accrued interest, but dirty price, it includes accrued interest, which is clean price plus accrued interest.
Very good answer. Anushka, very good. Okay, guys, that's a very precise answer. Maybe you can just add an example to elaborate it further, but this is exactly the answer which I'm looking for. Okay,
Sir,
what is the, yeah.
Sir, I have been lacking to how to elaborate answers. So can you give some tips to how to elaborate in a better manner?
See, Reswal, it's not a magic wand. It's something which you can listen to all the answers you are listening, right? It has been 2 hours since we are discussing the questions and answers. So you can see for yourself how you should accrued interest if it is asked and you directly go to clean price and dirty price doesn't make sense, right? First of all, try to explain what is the meaning of accrued interest. Then you can say clean price does not include it, dirty price includes it, that's all right. But first of all, it's very logical, common sense, I think. You explain what is being asked. Okay, so you say accrued interest is the interest which has been accrued so far, but it has not been paid. For example, if the coupon is paid, let's say every 6 months, then after 4 months, the interest is due for the 4 months, but it is not yet paid, right? It will be paid at the end of 6 months. So the interest which is due for the 4 months is accrued interest. As simple as that, right? And then you can say clean price does not include it and dirty price includes it. The seller of the bond needs to pay the dirty price to the buyer. The buyer of the bond needs to pay the dirty price to the seller, which includes accrued interest. That's what you need to say as well. Okay. Guys, what is the difference between current yield and YTM of the bond?
So can you repeat the question?
Yeah, I'm asking what is the difference between the current yield of the bond versus the YTM? Yogita, please try.
Sir, current yield is the annual returns which we get in the form of coupon payments. And yield to maturity is the annual returns which we get in the form of coupon payments and capital appreciation or depreciation.
Very good, Yogita, very good. Guys, that is a precise answer, right? To the point and covers the major. Okay, then you can elaborate it further by taking an example or however you want to elaborate. But guys, this is something which you cannot miss. What you say, okay?
Sir, do we have to mention the two assumptions also?
Yeah, you should. I mean, ideally you should. So try to give all the information you have related to that point so that the other person is very sure, okay, he or she knows everything. Okay, so basically you have to explain, but don't make it too lengthy. You have to keep your answer precise as well, to the point, by covering all the major points. What is the relationship between the market interest rates, guys, and the value of existing bonds? If market interest rates increase, what will happen to the value of existing bonds? Ashutosh?
Sir, if the market rate is more than coupon rate, then it is issued at discount. And if the coupon rate is more than the market interest rate, then it is issued at premium. And if the coupon rate is equal to the market interest rate, then it is issued at par.
Ashutosh, my question is, what happens to the value of existing bonds? Existing, okay? I'm not talking about new issuances. I'm talking about what will happen to the value of existing bonds if the interest rates in the market increase.
Sir, the value will decrease.
Good. It has an inverse relationship. If one goes up, other goes down. If one goes down, other goes up, right? Why does it have an inverse relationship? Anybody? Why would you say if the market interest rates go up, the value of existing bonds will go down? Why would that?
Sir, because certain law of demand and supply in the market goes on between the investors.
Yeah. Okay. So basically, if the market interest rates go up, then the bonds which were issued earlier would have been giving a lower coupon rate. Yeah. Now those bonds will not remain attractive in the market because interest rates have gone up. New bonds are being issued at a higher rate. So why would somebody like to buy the bonds which are offering lower rates? So the value of those bonds, demand of those bonds, price of those bonds will go down. Okay. What is the process of securitization? What is the process of securitization? Okay, Yogita.
Sir, securitization is the process by which mortgage-backed securities are issued against illiquid assets.
Not really. Paridhi.
Securitization is a process of converting the illiquid assets into liquid assets. For example, the major work of a bank is to issue loan. So if the bank is issuing, home loan, so they will be getting a collateral. For example, the property deed of the home loan. So for the banks, it is not of any value. Like for example, they are not liquid in a manner, so they cannot. So what do? They create a large asset pool out of these property deeds, and then what they do, they sell these to the investment banks. So investment banks, send these asset pools to the credit rating agencies, which in turn analyze these and rate them. And after that, these IBs issues the mortgage-backed securities. So what does happen is, when they issue the securities to the people, they get some money, and with that money they pay the banks. So what happened is, these asset pools are generally converted into cash by the IB. They sell these to the IBs and they get cash in return. So in general, they're converting these illiquid asset, that is the asset pool, into a liquid asset in form of cash, so that they can further go with the process of lending loans to the public or retail investors.
Absolutely, very good answer. Okay. Guys, is it
Sir,
clear?
sir, can
Yeah.
you repeat once again difference
Yeah.
between mortgage and asset? What is in the securitization process of asset mortgage security?
See, when you talk about securitization, guys, what you are doing is you take a pool of illiquid assets such as mortgage loans or personal loans or credit card receivables. Assets could be anything. Yeah. So you collect them, pool them together, and issue securities against those assets. That process of issuing securities against a set of assets is known as securitization. Now, when these securities are issued against mortgage loans, they are known as mortgage-backed securities. Whereas when they are issued against personal loans or credit card receivables or vehicle loans, they are known as asset-backed securities. I hope we are clear on this.
Yes, sir.
Guys, trust me, nothing of this is difficult. Just a matter of reading it twice or thrice. And you will be as good as I am. Okay? And don't think anybody would be perfect. It's not about that. It's about being good enough. Okay? If you read it thrice and if you see the recording thrice, I'm sure you will be good. Let's come to money markets, guys. What is the role of discuss money markets and capital markets? I'll go straight into the topic. What is interbank lending, guys? What do we understand by interbank lending?
Interbank or intrabank?
Interbank. What do we mean by interbank lending facility? Answer. Guys, give me 2 minutes. Huh? I'll be back in 2 minutes. Meanwhile, you can think about what is interbank lending. Okay. Okay, who is going to answer? Diksha.
The interbank market is a global network where institutions, banks trade currencies and other currency derivatives between themselves, and they use their own exchange rate and interest like CRR and SLR, uh, interest rate risk.
Okay. Diksha, are you reading it from somewhere?
Sir, no, sir. The interbank market is a place where banks they trade with themselves and they decide their own exchange rate like CRR and SLR.
Anushka.
So it means exchanging funds between banks nearby each other to manage their daily expenses and withdrawals. And they also ensure to have enough liquidity.
Yeah, good.
And they
Okay.
have various types also, like call money, notice money.
Yeah, good, good. Okay, guys, as the name suggests, interbank lending, it means the market where the banks lend to each other. Okay, so one bank having excess funds lends money to with other bank which is having shortage of money. Yeah. So the banks exchange funds with themselves. Now, why would have somebody excess? Somebody would have excess, or somebody would have shortages, while trying to maintain the regulatory requirements set by the regulator. For example, you have CRR, SLR. The banks need to maintain these ratios. Now, while trying to maintain these ratios, or otherwise also, if they have any liquidity problem, what they can do, they can borrow funds from other bank. This is what we call as interbank. Okay. Guys, don't use fancy terms. Okay. For example, use currency derivatives and all, can backfire. What is the difference between notice money and term money, guys? What is the difference between notice money and term money? Ashutosh.
Sir, in notice money, the number of days are mentioned, and in case of term money, it has to be between 15 days to 365 days.
In notice money, also you mentioned the days, but it would be between 2 days to 2 weeks. Okay. Notice money also, the days is mentioned, just like term money, but notice money is for a period of within 2 weeks, whereas term money is for a period of more than 2 weeks. Guys, what is a certificate of deposit? Anushka.
So they are unsecured promissory notes, which is issued at face value and they are redeemed at face value plus interest. And their duration is between 7 days to 365 days.
Right. Yogita, would you like to add?
Question.
The certificate of deposits are issued by banks to raise funds. They are issued to banks, RBI, corporates, and they are unsecured promissory notes, and they are issued at face value and redeemed at face value plus interest. And they are also negotiated instruments. That means they can be easily transferred to others.
Good. Good answer.
Sir, I have question.
Yeah, that's
Sir, why they redeemed at face value only? If the interest part is neglected. Why they redeemed at only face value?
No, they are redeemed at face value plus interest.
Sir, if
They are
we
issued at face value, but they are at maturity you get face value plus interest. Okay.
okay, sir.
What is a commercial paper, guys? Anushka?
They are also unsecured promissory notes, and they are issued by corporates or companies, and they are sold at discount, and they are redeemable at par.
Right, good. Okay, generally issued by large corporates with good credit ratings. Short-term funds. They are also unsecured, so there is no collateral given. They are a promissory note that whoever is holding the commercial paper at that time would be able to get the money back from the. These can also be negotiated. They are issued at a discount and redeemed at par. Okay.
Sir, what is the time duration in commercial papers?
Usually between 1 to 270 days.
Sir, 1 to
270 days.
okay.
Okay. We have discussed about repo, so I'll not go into that again. What are treasury bills, guys?
So treasury bill issued by central bank mature and the mature of is less than 1 year and issued at discount and redeemed at par.
Yes, that's good. It's an instrument which is used by the governments to raise short-term funds. Okay, they take the help of the central banks such as RBI in India to issue these securities to the dealers, to the investors. Right? There are two types of bids: competitive bids and non-competitive bids. I think we have discussed that. Guys, what is the meaning of stop yield and stop out price? In the competitive bidding, there is a concept of stop yield and stop out price. Does anyone remember? Oh.
I don't know about stop yield, but stop out price is like you tell the broker a certain price or at a point where you should take out the profit or stop if you are bearing certain amount of losses. So it's a yeah. So you tell the broker to like take out the profit if the price reaches at a certain point and stop if the share price falls. I don't know stop yield.
All right. What is the difference between uniform auction method or a single price versus multiple price? Guys, my question is, we read about uniform auction method and discriminatory method. What does it say? Anushka?
So in uniform auction method, we all pay at the same price, which is the stop out price. Whereas in discriminatory method, they pay the price they bid for.
Yes, everybody pays the price they bid for, right? What do the non-competitive bidders pay, Anushka?
They pay the weighted average price based on the competitive bids.
Very good. Great. All right, guys, that's about it in terms of all the topics. If you have any doubt, you can ask me.
So can you once again repeat the competitive and non-competitive? It's not clear very much.
As well, have you studied it yourself well?
Yes, sir, I studied, but I not clear in the depth meaning of this.
What is your understanding so far?
Sir, in which competitive bidding, in which the investors are bid at a certain quantity at a certain price,
Yeah,
and in the non-competitive, the investors are traded at a certain quantity. They are guaranteed in this,
yeah,
and in competitive, the less traded quantity are less traded, and in uncertain, in uncompetitive, there is no trading limits.
Hmm. So what happens is when the government is issuing the securities, they ask for competitive bids as well as non-competitive. In non-competitive bids, they will put a certain limit that okay, you cannot buy more than these many treasuries. Okay, so if somebody is looking to buy a small number of treasury securities, they will go for non-competitive bidding. But if you want to buy large number of government securities, you need to go through the competitive bidding process. Okay, in non-competitive bidding process, you only mention the quantity you want. It has to be within a limit, and you will get that quantity. Okay. In competitive bidding, you mention the quantity you want as well as the price, and these bids are arranged from highest price to lowest price, or lowest yield to highest yield. Okay, and based on that, the allocation happens. So you may get the allocation, you may not get the allocation. That depends upon the price you are ready to pay for. If you are ready to pay a high price, you will get the allocation. Otherwise, you will not get the allocation. Yeah. Once that is selected, you calculate the weighted average price, which is paid by all the non-competitive bidders. And in case of competitive bidding, it would either be a uniform auction or discriminatory method. So in uniform auction, everybody would pay the stock out price. In discriminatory, everybody would pay the price they bid for. Okay. Okay.
Sir, I have a question.
Yes, please go ahead.
So what is the difference between vanilla product and a structured product?
Equity is a vanilla product. Okay, bond is a vanilla product, but mortgage-backed security is a structured product. Asset-backed security is a structured product, which a financial institution has structured as per the needs of the market. Whereas equities, bonds, forward, swaps, forward, futures, options, all these are vanilla products.
Okay, sir.
CDS is a structured product, for example. Yeah, and PS is a structured product.
Sir, I have a question about tomorrow's class.
Yes, please ask.
Sir, the time that has been mentioned in the mail is 3 a.m. to 6 p.m.
Yeah, guys. That is the time. Okay.
Sir, but 3 a.m. is
3 not okay. Okay, that is the conclusion. Let me just check. What is mentioned there.
I think, sir, it should be 3 p.m., not 3 a.m.
Let me just. Yeah, guys. Sorry for that. It's a mistake. It should be 3 p.m. to 6 p.m. 17th August. That is tomorrow. 3 p.m. to 6 p.m. All right.
Sir, can you explain the stop out price once again and stop yield?
Stop out price is the last price which is accepted. Okay, what you do, you arrange the competitive bids. Yeah, so you start allocating the bills to from the top. Okay, at a certain point you will stop, right, allocating the bills. The price, the least price at which you are issuing the bills is stop out price. That would also be the maximum yield. That is known as stop out. Okay.
Okay, sir.
All right, guys. I have marked everyone present because everybody participated in a way. But guys, I particularly liked Pariti's answer, Anushka's answer, Yogita's answer, Ashutosh also, Paricha also tried, but some of you guys need to work harder. Okay, and I'm sure you already know where you stand. And guys, your competition is just not among the batch itself, your competition is with thousands of other candidates. So you can imagine the level of competition you have, and they would not be ready to listen to any excuse. I'm sure we are facing a lot of troubles. There are so many constraints, there are so many problems we are facing why we are not able to study. But guys, trust me, it's a reality nobody fears. They just want the best candidate. They will take the best candidate. They will not be listening to the reasons. So please guys, for your benefit, study hard. Take time out, make a routine, study every day. Only then you can be sure of the placement, guys. Otherwise, it will become a challenge. All right. See you tomorrow, guys. Bye-bye.
Bye, sir.
Thank you, sir.
Thank you, sir.
Thank you,
Thank
sir.
you, sir.
Excuse me, sir.
Yeah. Thank you.
सर एक्चुअली 18th को मेरा एग्जाम है सो अगर क्लासेस थोड़ी आगे पीछे हो जाएं एंड मेरा एग्जाम
Okay.
सॉरी
18th को.
18th को इसी कमिंग 18th को और एग्जाम
difficult to change the schedule now. Okay. Go through the recording, you will get the recording, and if you have any doubt, you can ask me. It's sorry to say, but difficult to change the schedule right at the last minute. Feel free to ask me any doubts after the class. Maybe you can join back on the whenever you join back, you can ask me any doubts for a half hour also. That's fine. I'll explain you everything. But please go through the recording and then ask me that. So,
Okay. Sir?
Yeah.
Sir, they have mentioned that tomorrow there is some free assessment. Sir, what is the schedule for tomorrow? Like free assessment with Namita ma'am.
Yeah, so basically she will be checking your communication skills, guys. And based on that, she will be making a judgment in terms of your soft skills preparation. Okay, so what we try to do in this program is we try to make you good in domain knowledge as well as soft skills part. So she will just ask you basic questions like introduce yourself or why have you joined this program, what are your strengths or weaknesses, so that you speak and she's able to judge you on the communication skills part. Okay.
So sir, it's not related to domain knowledge.
No, it's not. We are not going to discuss any technical topic like money market or fixed income, nothing like that. It's going to be a interactive session where your soft skills will be assessed. Okay. We are going to have a lot of sessions like this so that anybody who is facing the challenge in terms of speaking or explaining, basic will help more of it. All right, guys. Thank you.
Thank you.
Thank you.
Thank you, sir.